Hello and welcome to this video. This is a short one. If you have purchased the 100k compound sheet, then you'll find this video somewhere in the link that is going to give you a few more pointers and guides. Now, with the strategy for the alligator indicator, you first of all find the indicator here and go to insert indicators. You go to Bill Williams and you go to alligator, and the normal settings is fine. That's what we use, so you click on OK. Now, how does the indicator work? It works based on measuring the average move, so it's a moving average. It's more on the exponential side, and it does it over a period or a set time, and through that you can predict whether a trade is going up or down. So it is basically calculated and very precise in many ways. It's not perfect, but it's great. Now, I talked about picking a trade from the 30 minutes chart and the 1 hour as a backup, and I'll explain why here. So the 1 hour chart, if you look at it, of course you can see it on a larger scale. Every cell, every individual cell, as you watch my cursor, every individual cell is a day, because the period separates it into days on the hourly chart. So on the hourly chart, it is in days. Now, if you should go to the 30 minutes, you get a closer look so that you can actually get that 10 pip stop loss that you're looking for. Now, you can do it on the 1 hour, but on the 30 minutes, you can see it more clearly, and that's why I said 30 minutes. So let's go and pick some trades. Let's just start. Let's see, this is the trade we use, right? This is the trade that we use. Let's start from, let's find a clear one. So let's use this one. No, hold on. Let's use this one, the buy trade here. So on 7th September, there is a buy trade, and this is USD JPY. Sorry, I took some time to select. I'm just demonstrating this to you, right? So the strategy we have is that first, for a buy, the green must cross the red, coming from underneath the red, and the blue must be on top. So we can see that the green has crossed the red. So the trade was moving, all right? In real time, the trade was moving, and then it crossed the red. But you don't enter it. In the rules, I mentioned that you wait for it to cross the blue and be above the blue. Then on the next open candle, so in case you don't know a candle, in case you're not too familiar with trading, but you should be familiar with trading, I think I'll create a beginner's guide to trading, or I'll leave some free guide for you as a beginner to understand the terms in trading, so you don't struggle to understand this, in the description of the video. But inside here, you see that this stick, each stick is a candle. When I say inside, I mean I've zoomed in. So looking into the trade more closely, this blue stick here is one candle. It looks like a candle. It has a stick, a wick. The sticks is called a wick, and then the main color, or the main colored part, is called the body. So this is a candle, and this is a candle, and this is a candle. Each one is a candle. And on the hourly chart, each candle represents 1 hour, 1 hour, 1 hour. That's how it is calculated. So when this crosses, you don't enter the trade. So you wait till the next candle starts. So this red candle here is the next. And when it starts, it is not red. It starts as a blue, but it closed and became red. Don't worry about the color. You can even make it a general color. But what you do is, on the opening of the candle, or the next candle here, you enter your buy trade. Simple. For a sell is the same thing. When it crosses and comes down, assuming this is the sell trade we are taking, the green crosses the red and the blue is now above, or let's say below the green, right? You wait and enter in on the next open candle. So this candle here, this candlestick, you enter. When you enter, you take 20 pips. So 20 pips from here to about somewhere here is 20 pips. So you don't have to take all of this profit. You just take in this. And somebody asked me, do I use this? Yes, I've used it to trade and it works. I even used it last week to take a trade, and I'm trading myself with my own formula, so you can trust it. I've taken a trade and I'll post my trades. Maybe I'll share them, maybe I won't share them, but I use it and you can use it. Now let me now insert the RSI. This is an extra tip, but you don't need the RSI. The RSI is just some indicator that can give you an idea of reversals. All right, so where is the RSI? It's an oscillator, so it's called relative strength index, and when you click on it, just press OK. So if you look at the RSI, what do you see? You see that it has this line here that goes up and comes down. So let me show you. It goes up, it goes all the way up, and then it comes all the way down. Well, not all the way sometimes, but basically you get the point. So one thing that could help you to trade or to find reversal, when I say reversal, what I mean is that a price is going up. You want to find out when it's going to reverse to come down. And the price is coming down. You want to find out when it's going to reverse to come up. So let's go back to the trade we took. Let's see. Let's see if I can find the trade. I think it's somewhere here, if I'm not sure. No, let me see. Yeah, this is the trade. So right here, you can see that the RSI is close to, now there are demarcations of this RSI. There is the 70 point and the 30 point. So 70%, 30%. Now, as the price gets closer to the 70%, it is losing momentum, and because of this, it is more likely to reverse from the buy. And it also applies vice versa for the sell. So when your price is going up, you know that once it gets to the 70 or crosses it, you know that it's time for it to come down. So if you combine that with the alligator indicator, you have confluence or agreement that yes, indeed, your trade is coming down or up. So for instance, with this trade here, I saw that the green has crossed the red and the blue is above, perfect for a buy. It has crossed, the candle has crossed, and when I look at the RSI, it is not really close to the bottom, yet still it is not really above, so it means there is room to enter. And this is how you use it. Don't be too specific about the numbers on the RSI. As long as you see that there is room to enter, like it's somewhere in the mid region, somewhere in the middle, around 50, 55, right? It's around 55, the 55 value for a buy, you can enter. Then for a sell, once it gets to the top of it, the very top, you see that it has crossed. So this is a clear indication that a reversal is coming. If you see a cross, and yes, you take your trades, first of all, you use the rules I've given. The RSI is only for extra confirmation. You don't even need to use it. In fact, you don't have to use it. But it's an extra tool if you just want to check again to see if you are going in the right direction. That's all. So this is the end of the video, but one last tip I need to give you is this. One last secret. So before taking the trades, look at the lines. Look at the lines of the alligator indicator. I explained that they are moving averages. Now they are less entangled here. You can see the green clearly, the red clearly, and you can see the blue. So it's safe to enter. When you see the lines are entangled, like they are so entangled, look here. around this section right here, you can see that it's like, let me try to draw a square around it for you to see where I'm showing you. Alright, this is a tip, an extra tip I'm giving out for free. You can see that it is entangled, so with such a place you don't enter. Just make sure that you can see the green, red and blue lines clearly separated like wires. You know, if you have wires and they are all clear together, that's good, but if the wires are all muddled, like they are all entangled together, that's not good. So just make sure that it's clear enough you can see the crosses, and then you use the other rules to support. If I were you, I would even delete the RSI. Okay, this is just for those of you who just want extra confirmation. You don't need it. I'll just delete it and just focus strictly just on this indicator, and you are good. Don't worry if you don't see any other thing on your chart. Don't worry about the arrows, it's not part. Don't worry about the lines, it's not part. Just use the indicator and use proper risk management. Take your trades twice a week or once a week, and just use a proper stop loss. Always have a stop loss. And how do you get a stop loss? Stop loss is something that you just fix in there, which is below or above where you take the trade. I don't have to explain a stop loss to you, but if you don't know the basics of Forex trading, then you should learn that first so that you get a whole idea of it. Maybe I'll drop a video about a few basics of Forex trading later on so that you can understand. Look in my description. I have this book I found. It's not, you know, it's not like a very complex book. It's just the basics of Forex trading. It can explain these concepts to you. It's not something, you know, that is hard. Just a few concepts like the pips, the spreads, placing an order, the moves, trends, ranges, all those things, so that you can learn about Forex trading for beginners. But that's it, and this is the end of the extra rules for entry using the alligator indicator and strategy to trade. With this, I wish you well, and I wish you good luck, and I hope that you don't share it with somebody for free because you didn't really get it 100% for free. But yeah, go ahead and trade, and please, the last tip is be patient. Just be patient and always stick to the strategy. If you are patient and you stick to your strategy, your rules that I've given you, you will be fine. Goodbye.